right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back, and we are going to get started with our morning analysis of the majors. Also, I just want to mention that Ben Bernanke is going to be on the CNBC Squawk Box in a half an hour. I will more than likely, because I have a lot of, obviously we have a lot of listeners around the globe as well, and not all of you have access to CNBC. So what I am going to do is I'm probably going to turn up the television so I can hear it, and I'm going to possibly be just, keeping this screen up and interpreting to you what I'm hearing, like any key comments, because Ben Bernanke, obviously he's not the Fed governor anymore, but getting his thoughts on where he thinks the Fed's at, and I don't know how much communication he has with Janet Yellen anymore, if any. I really don't, but I think he is going to have some sort of insights to what he would be thinking if it were him and it was his Fed still. And so that should be really a very interesting interview for those of you that are listening in. Obviously, they can hear it at home. I'm probably going to just put you guys on break for about 10 minutes through the Ben Bernanke interview. And like I said, just rattle off his key comments. I don't know how market moving it's going to be, but it could be market moving. All right. So anyway, Alden says, I cannot see you. You shouldn't be able to see me. You should be able to see my screen, Alden. As that you should only be able to see the screen. Okay. And you'll be able to see the charts, because let's go through the euro dollar. So we're going to start with the euro. We're going to get our analysis done. We've got a half an hour to do it, so let's do it. All right, so here's the euro dollar. And like I said earlier, I just shorted some at just an hour ago. I shorted the euro at 112.70. I already exited at 26 or 27. I'm already out. Now, why did I get out? Because from the overnight price action, we were at the 786 retracement. Do you see this? Okay, we were looking at it. This is where we opened, right here. Okay, last night. That was the low from overnight. That was the high. We just hit the 786. That's why I got out of my euro dollar short. Now, would I short the euro again? Absolutely. Any rally to 113 today, I'm a seller. Okay, I'm a seller because of this. You have that 113 and change, but more importantly, that yellow downsloping trend line that comes into play right at 113 now. So any rally from here, let me remove this. Any rally to 113, I am a seller. Okay, we should have support on a move back down to 112. This previous resistance should act as support. It's also going to act as a gap fill. That comes in at 112. So 112 to 113. Those are your parameters today if you're trading the euro dollar. I am a seller at 113 if we get there. Now, for those of you that want to be on the long side of the euro dollar, 112 is probably not a bad place to be long. Okay. We have a range environment. Whoops. Still, nothing's changed. Just we're obviously in a range. So selling at 113. If you guys want to be long down here, probably not a bad idea. I personally won't be long the euro dollar. I'm just looking to sell rallies, not buy dips, but that's my approach to the market, not necessarily your approach to the market. So the euro dollar analysis is, like I said, it's pretty easy. I mean, you can see we're boxed in here right now. We're boxed in between here, and realistically, we're boxed in between 111 and 113 right now. Midpoints at 112, and I would trade carefully while we're in here. Okay, all right. So let's go over to the cable. Pound or the euro was easy. So the cable underperforming today due to the fact that the services PMI numbers overnight came in weaker than expected. So the cable, obviously slipped as it was rallying overnight. Okay. Now, what you'll notice here is, and this is, I'm going to take a step back and I want to look at the longer term view of the pound. Now, what we've seen is we've seen dollar weakness obviously come through the market because of the weak non-farm payrolls. But if you're looking at the pound dollar and you're looking at it just like this, the one thing I have to point out with the cable is that despite the weak dollar moves that we've seen the last 48 hours of trading, okay, the cable has barely bounced. I mean, this bounce is very minor. I mean, if you look at it, I mean, let's remove this for a second. Look at this. We can't even get a 24%. Oh, I guess we can just get a 24% retracement. That's it. Now, if I was long the cable and that's all I saw, I'd be like, what the hell's wrong with this currency? Seriously. But what you'll notice, and this is the point that I was making last week, is there the the pound is breaking down not just against the pound dollar. I mean, the pound dollar is not doing anything, but look at the pound New Zealand. That's a breakdown. Look at the pound Canadian. That's a breakdown. Look at the pound Aussie. That's a breakdown. We're trying to break down. I mean, we're down. We're below 215 now. I mean, the cable looks weak on the crosses, not just the pound dollar. So if you guys are only looking at the pound dollar and you're like, oh, you know, the pound dollar is kind of should be balancing. I don't know if it should be because it's breaking down against everything else. So right now, this 24% retracement, it is capping prices. I did say last week that I wanted to be short on a move back to 152.50. I did not short the cable, even though we got there. I should have, but I didn't. All right. But this is obviously capping prices now. And if you're long the cable, you're probably a little concerned with the fact that it's only rallied back 24%. So any move back up to 152.40 is probably going to find some sellers now. So, and I'm not long or short the cable at this moment. Okay, we're in a range, but we're threatening. We're still threatening to get out of this range to the downside. That is. Now, you have to ask yourself, and I have no exposure in the pound dollar. Okay, I'm obviously I'm short the pound Canadian, and I've got some short pound yen. Okay, but not the pound dollar. But you have to ask yourself, if you're long the pound dollar, at what point do you go, you know what, just get me out of this thing? It's so weak. This thing is such a piece of garbage. It will not reverse, you know. At what point do you go, just get me out? See, I really think if we break that hourly support right there, you're going to see some stops below there, which that comes in at 151.60. So below 151.60, oh, the euro's opening up some downside. 151.60. Okay, that's where support is today in the cable. Hold on. Swissy new highs. Oh, we're gonna go to the Swissy here in 1 second, but this Canadian's looking better. And if you guys are just tuning in, I shorted the euro dollar at 112.70. I just got out at like 112.27 earlier this morning. I bought the dollar Canadian at 130.82 because it was testing its monthly breakout point. I'm still long the dollar Canadian from this morning. I'm up 32 pips right now, and I'm thinking about holding it at the moment. All right, let's go over to the Swissy. So the Swissy, kind of like the yen, is holding up pretty well. Now the Swissy, I'm still long my position. I did not waver on Friday. Okay, I stayed long. We hit the 618, 96.50. We bounced. We held the 4 hour. You can see this 4 hour candle. We held above there pretty nicely. Okay, and to me, it looks like the Swissy is doing a little bit of this. And let me get rid of this really quick. Get rid of that. Let's get rid of this. Let's do some of this. Okay. something like that. I I wouldn't get overly aggressive the Swissy right now, and you guys know I'm not adding until we get above 98.50. We get above 98.50, that's a that's a game changer to me. Okay, above 98.50. That's where we start breaking that big big monthly weekly trend lines. Okay, it's going to be way above here. We're not there yet. I'll be happy if we break above 98.50 or 99 cents this week, obviously, but not there. But I will tell you that the Swiss looks weak, not just the dollar Swiss. You know, the Euro Swiss is not too far off of 110. The Swiss yen is still really holding below a major trend line. The Aussie Swiss, New Zealand Swiss, Canadian Swiss, all those look pretty damn bullish. So it's the Swiss franc looks weak. And my dollar Swiss position, I don't consider it a dollar position. I consider it a Swiss short position, as you all know. Okay. So that it's, you know, it looks like we're probably going to recover here, but I would say that today's moves are probably fairly limited to 97. See that previous support, 97.60. I think that would probably do it. That's a 786 retracement of the NFP move, right? High to low. 786 comes in at 97.60, so I'm assuming that's going to be resistance today. 97.60 if we get up there. We're still in a range. Support on dips. You can see that hourly wick right there, support right through here. That looks to be at 96.80. Okay, so we're still in a range in the Swissy. Obviously, it may be hitting highs right now or near its highs of the day, but don't get too carried away here. It's not like it's in breakout territory or anything. All right, let's take a look at the yen. So the dollar yen, you know, got back above 120. It's obviously following risk appetite higher. So as stocks climb higher, the dollar yen climb higher. But the dollar yen's facing a ton of resistance up here, just a ton of resistance. See all this resistance coming through here. That is going to be at 120.35. 120.40 would be the spike high here, but we'll just go with 120.40. Resistance. Support. This is a range. We almost broke down on Friday. Obviously, got a hell of a whipping around, but I don't know where support's going to be, frankly. Let's just say we peaked, right? Let's just say, for argument's sake, that we did today. We peaked at high. 38 is going to 38% retracement comes in at 119.70. We got some spikes there, so that would be a logical support today. That's just making the assumption that we did already peak on an hourly, 119.70. And that's just an assumption. It's not you know, because looking at the dollar yen, I can't look at this chart and say, well, that high is sticking. It looks like it is, and it looks like that resistance is going to hold, but we could actually hit new highs too. So I'm going to go with the assumption right now that high is sticking for now, and we may come down here, especially if the ISM is a little weaker today. Okay. Let's go to the Canadian. So the Canadian was, I'm glad I woke up when I did. Let's just put it that way. Okay. Big breakout point from 2009. We just came back down and retested it. That's the big dotted line. I've had the big dotted line there for, I think we've had it on our charts literally for 2 months now. You know, so you can see the move from non-farm payroll. There's a high or pre-non-farm payroll high, or excuse me, low, high, right? 786. Paulie said, man, we dropped 400 pips just since Wednesday. I mean, Wednesday we were 34.50. We went to 30.50 basically since Wednesday. Obviously getting oversold. Relative strength is diverging. Um, the 786 was right here. Big support. So it looks like we're going to bounce. Now, the question is, how far are we going to bounce? And because I got long, so my question is the same as everybody else's. You know, how, if you got long, got a nice little hammer developing. We got an hour left in this 4-hour chart. But, if we a bounce back to 131.70 is probably going to cap it, right? Because if you look at this support right here, spike low, 131.76. Spike high right here on a 4-hour chart is 131.74, which so 131.75. I mean, that's resistance for the dollar Canadian. 131.75. It's going to be key resistance today. You know what? We get close to that, I'm getting out. I'll get out of my I'll get out of my long. Now we have gone from a bullish trend to a range environment. I really think that dollar Canadian is going to be in a range environment for now. Okay, I do. And if you guys don't know why we stopped where we stopped, let's go ahead and reiterate from Wednesday. Remember, tweeted out this chart when we hit the monthly and weekly 618 retracement. We hit it. We hit the resistance, or within 20 pips on Wednesday, and said that breakout above 134 looks like a false breakout. Remember the tweet from Wednesday. We've pulled back substantially, 400 pips in just a couple of days. And we're probably just going to bounce around here for a while between 130 and, maybe even, maybe even sub 130, but maybe 130 to 135, just bouncing around. I see that as very, very logical today, or over the course of the next couple of weeks. Now, that doesn't necessarily mean it's going to happen. I just, I think it's doable. So today's low is going to be pretty key support today. 130.65. It's going to be important. Any dip below 131, I think you're going to find some buyers though. People are like, oh man, I didn't realize where we were at. I didn't realize that we were back at the monthly breakout point from 2009. I didn't realize we were back at these levels. So any dip below 131 is probably going to find some buyers now, because you got people that are, hindsight's 2020. So they're, back looking at the charts going, oh shoot, we're at pretty key support here. I didn't realize, how I forgot about that. You're going to get a lot of traders that are doing that now. The hindsight, oh crap, I forgot where we're at. Oh yeah, this is going to be some good support. You got people like us that are, coming in North American trade and sitting in front of our computer and going, oh, dude, this is a major breakout point on a monthly basis. Yeah, any dip down here now, I'm going to start buying it today. People that are just in front of their desk right now, they're like, oh, I'm a buyer, close to 130. Yeah, give me back down there again. I'm buying. So you're going to get a lot of that attitude here today, I'm sure. Okay. That's the Canadian. Let's go over to the Kiwi. Whoops. Here is the Kiwi dollar. So the Kiwi dollar, I mean, we broke above 64.50. That was a pretty big breakout overnight. And you know what? We had Eric in our chat room. So funny. I thought it was hilarious. He said, he goes, it's kind of like that. It's kind of like looking at that turtle on the fence. How did that get there? I laughed. Eric, I thought that was pretty funny. Good on you. That was good. So we had our ABCD from last week. with risk appetite improving, obviously the Kiwi has improved. We are out of our bearish environment, as we wrote last Thursday or Friday. I think Thursday. And now we are rushing right at the 618 retracement, and we're setting up a nice shooting star on a 4-hour chart on the Kiwi, which to me looks like a really good short if we can hold these levels within the next hour. So I might actually short some Kiwi soon. 65.28 is the resistance, so the overnight high is 65.30. Actually, I think I am going to short some Kiwi. I'm just a little late to the party. I'm not going to short too much though. I don't want to be too aggressive here. I sold some Kiwi at 65.03. We are in a range environment. Okay, that's a 618 retracement. That's a shooting star. Okay, any dip now down to 64.50 will be supported. Yeah, that's going to be really good support on the way back down. Okay. All right, let's go over to the Aussie. I'm trying to do this before Bernanke comes on air, so which he'll be on, I guess, in about 10 minutes. Joe says he's trying to sell his book. Well, he may be Joe, but still, he did run the Federal Reserve for 8 years. Was it 8 years? Okay, 50% retracement in the Aussie. Now, we do have this double bottom extension, does play right into the 618. So I see the reversal here. I'm a little bit more hesitant about being short the Aussie, but it has been underperforming. So 71 resistance is 71.10. I hate this. Look at our bias chart. Those of you that have been listening into this webinar for 5 years, 10 years, 13 years, you know I don't like it when we have all range, or when it's neutral like this. I hate it. Hate it. I hate being in a range environment like this, but it is what it is. Support. Now this spike high, and you can see those wicks that couldn't hold above the 38% retracement, and see there's a spike high right here. That should offer us support today, and that comes in at 70.65. Okay. That's a little too close to where we're at though. So here's 50. I mean, we should find support back down here. 70, 60, 70, 50. This whole area. I'm going to write down 70, 50 for now, but we should find some support down here on dips. All right, guys. When I come back, we're going to do the dollar index. I got to go get some more coffee, and we'll do the other ones after Bernanke's done talking. But we'll see you back here in a few minutes. Don't go anywhere. Thanks, everyone, for being here. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. And by the way, the Swissy was just brushing new highs. It looks like we've got Ben Bernanke jumping on Squawk Box right now, so stand by. He is. Okay, so like I said, I'm going to be keeping you guys on here. There's Ben Bernanke. He is on CNBC's Squawk Box right now. I got to turn this up a little bit. His first live interview since leaving the Fed. Okay, so while we're waiting for his comments really quick, let's do the dollar index. Okay, so here's the dollar index. This is a 4-hour chart. Um, 4-hour gap fill comes in at 96.13. I think if I'm not mistaken, that's going to take us right up to really key resistance. Now remember, we have, and this is something we've been monitoring for the last few sessions. Is the dollar index. Okay, real tight trading range, and we might actually post a breakout today. So I mean, I would say support is at 95.25, 96.20. So 95.25, 96.20. We're looking for a breakout here on the dollar index. Okay. Let me see if I can. I'm going to take a couple of your comments this morning while we're waiting for Ben Bernanke to talk. Oh, here he is. Never mind.